traders, Kingdom Millionaires is E. We back like we left something. Today is Tuesday, April 23rd, and I'm gonna show you how I made like $700-800 today on NAS. So I don't do all that talking. We on into it. Alright, so I started with the 15-minute chart. I woke up around 8, so got on the charts. As you can see today, the date is down there, April 23rd. And I looked at my 15-minute, I zoned out, and I said, okay, I already had this trend line forming. So as I stated in my previous video on how I know when to hop in or not, in the trend breakout, I'd wait for 3 touches. So I seen I had 1, 2. I didn't have another one down here. I had 1 and then 2 touch down here. I like 3 touches to get in for the sale, so I seen it didn't touch. I seen it touch, and it didn't break up under. So I was looking to get into it for the for buys today, for it to bounce up off this 200 EMA and get into buys today. So I downsized, went to the 5-minute, zoomed it in, and then I seen okay, it was the zone. It came up, touched this zone once. Okay, I noticed that. I seen it touched it again this time, so I'm like, all right, bet. Like I said, I wait on 3 touches. So I was either looking at it, the touch here, break above, close, get in for the buys, or it was gonna touch, drop down, and come on down here. So we was looking at it. We don't want to be one-dimensional. We want to look either or. We either in for the buy if that's what it give us, or we in for the sale if that's what it give us. So, all right, I zoomed in. I'm like, all right, this looking great. Now, another one of my confirmations to get in. I see 2 things right here. Okay, actually 3 things. Now we're gonna write it out. 3 things. We're looking for buys, so we're in for buys. Why? Also, you can tell it was in a buy trend as well, because if you zoom out at this zone right here, this is a key zone, because the market came and it looked like it liked this zone really a lot. Why? It came up, dropped down, came up, touched, dropped down, came up again, did a fake out, act like it wanted to go up, dropped all the way down, came back, it broke it. Why would it not come and kiss that line and say goodbye? If it done kissed it that many times, why would it not come back and say goodbye to it? So it dropped down, right? Touched it again, and then started looking like it wanted to continue up. So it really zoomed back in. We see, okay, it's breaking structure. It's minimal structure, but structure is being broken. This high right here got broken by when it came down. Boom, it came and broke this high. Right? And I also have my breaking structure indicator on. It's right here. This is the one I use. But yeah. So it broke that. I'm like, all right, cool. Came back down. Did what? Broke it again. Breaking structure again, as you can see. Broke this. Came up. Right? Dropped down. Broke it again. So I'm like, it's just structure being broken to the upside, because if you go based off market structure, right? The market goes up, comes back down. Breaks above that previous high, goes up, goes back down. Breaks up, goes back down. Now, it wasn't coming below the low, so it wasn't coming down and coming down there. It wasn't doing that. It was going right above it, going back up, dropping down, going right above this low. If it would have did something like this, we would have been, that's not correct market structure. So that's what it was doing. Okay, now we back on the charts. I'm up, I'm looking at it. Okay, I see the zone. I said, see, it's forming a little zone, right? It's doing a couple touches. 1 touch right here. At this zone, another touch. At this trend, which remember, it only tapped it twice. This was the second tap. It dropped lower to do a minimal liquidity grab, right? It came, dropped these lows. It formed a key entry and things that I like to trade for my entries. So let's get back to this. We're in for the buys, okay? That's our first confirmation. Next confirmation, touch trend. Okay, so it touched this trend right here. So that was, I'm looking, okay, do I want to get in? We're already in for buy, so how do I want to look at this? The next thing that not many people know about is a candlestick confirmation called the 1, 2, 3 engulfing candlestick. And what is 1, 2, 3 engulfing, E? I'm so glad you asked. Now, we're going to zoom in closer. You see how this did a sell, and then this candlestick engulfed it, meaning it made a bigger candlestick than the previous before. So this candlestick was a sell. It made a big buy candle. That is what I consider a 1, 2, 3 engulfing. So I would normally go like this. And guess where I'm in at? After I see that 1, 2, 3 engulfing, I'm getting right in at the candlestick break. That's my entry. Stop loss, kind of like under here, just in case it want to come back down, grab liquidity, and go back up. So I'm in right there off that 1, 2, 3 engulfing. I was in for buy today. I seen it touch my trend. Which trend, E? Okay, this trend right here. We zoom back out to 15 minute. This one we created. Boom. A touch was right there. A touch was right here. We wait on 3 touches, not 2. We wait on 3, not 2. So back to the 5 minute. It did a 1, 2, 3 engulfing. I'm in for the buy. It did a liquidity grab. Why? Because this wick came down lower to grab these lows out, and it looked like it want to go back up. So I'm in up here. I haven't even got my TP yet. But if I wanted to be safe, what I see is a counter trend supply. I would mark that because that would be kind of like a barrier. I see a supply right here, 5 minute supply, and it's counter trend. Why? Because it's in for sales. We're looking at buys today because we knew we was in buy trend before. So if it's dropping down, that means it's counter trend. Why? Because it's going towards our 200 EMA. Another confirmation to know we're in buys is if the market and the candlesticks are above the 200 EMA, which is this white line right here, my 200 EMA. If it's above the 200 EMA, we know we're in a buy trend. If it's under the 200 EMA, let's find it under. It might tap it a little bit, it might split the middle. If it's split in the middle, we don't too much like it. But look at this. It was under the 200 EMA, and the market was dropping down. It came, start crossing it started getting a little indecisive. It dropped it down again, came back, crossed it, now it's up. So when it's above the 200 EMA, we're in for buys. Below, we're in for sells. I'm going to put that right here. Alright, so we're in for buys. The market is on top of the 200 EMA. It touched our trend line, but did not touch 3 times. It did a 1, 2, 3 engulfing at the zone, the trend line, and it was a liquidity grab. Liquidity grab is like, say you have your stop loss. Like, say you would have been in and you would have had your stop losses right there, or you would have had a buy limit for it to automatically put you in, or whatever. It want to come back and grab those, the ones that it missed, and then it wants to go your opposite way. So if you were in right here and you thought it was going in for the buy, you were right, but it's going to come down and act like it wants to come and grab you and then go back up to your way. So let's see what it do. Let's see what it do. We're in, boom, 3 lots. We're in for the buy. We have not got our TP yet. We only get our TP once it starts crossing the zone, or if it would have came down, closed under this, and then, you know, but we're in for early entry. And our first TP kind of could be this supply, because it could come to this supply and drop down. Now, I would do a separate video on supply and demand zones, but this is just my trade that I called for today. I'll break those down in a later video. All right, so we in for buys. Boom, let's see what it does. Instant profit. Boom. Tap the supply. Now, all I'm doing is waiting on it to close above the supply. That means that supply is done. And also, what I seen right here, let's say I move this supply out of the way. Okay, and we're waiting on it to come tap the zone. I seen this demand. Now, again, I said I would get in demands and supplies later in another video, but I caught this 5-minute demand right here. I'm looking in to get to for a scalp. You know, okay, boom, I can get in again. All right, we're already up $120. So imagine if we would have just been waiting on this demand for today. Look at all these pips we would have missed. We're already up $120. Now we looking at the 5-minute demand for a second entry versus that being our first entry. All right, boom, we're gonna move that up. Okay, now with the demand, I'm waiting on it make this little small gap right here. I'm waiting on it to come back and touch the demand and then go back up. So right now I was looking at this to scalp this up. I'm like, okay, I know this for sure in buys right now. We already up on 120. Why not scalp it and get in again? Okay, we haven't got our TP yet. It hasn't touched the zone yet, so we still have more time to wait. All right, so it tapped this box. That's what I'm waiting on, and I'm getting in again at the break of the candlestick. Let's see. Boom, we got our touch. We got our touch. So now what we're doing is we're waiting on it to pass above this top candlestick. I'm going to draw my line right here. This is the break of candle. Once it crosses above here, I'm in for my second entry. So I wait on it to tap the box, break above the candle that tapped the box, and then go up. Then that's what my second entry will be. Boom, we're in right here. We're in right there. We're in right here. This is our second entry. Close that. I can move this out down there. Okay, this is our entry. And guess what it did? Our indicator showed us it just broke structure. So now it just gave us that next tap that we were looking for. So we were in off the 1, 2, 3 engulfing off this zone 1, 2, 3 tap. I knew we were in for buys. It did a 1, 2, 3 engulfing, which is what I look for. It bounced from this trend doing the second touch, not a third. It went up. Okay, we already in. Now we seen the 5-minute demand. It came back, tapped the demand. We're in off the break of the candlestick that tapped the demand. Now it's at our zone. 1 touch, 2 touch, 3 touches at our zone. Now, while we would know and wait on the touch, what we're looking for is for it to kind of close above here. That's when we can get our TP, and that's when we know it's really going up. Okay, so we're already in down here, our 1 entry. Now we're in again a second entry, and we could get a third entry. We could get a third entry. I didn't do a third entry, but I'm going to do and see how much we would have made if we would have did a third entry. So we're already in. We're comfortable. We good. All we're doing is waiting on it to cross and close above this zone right here. All right. And then we're about to get our TP. And for the second entry, you'll be like, okay, well, where is my stop loss at, right? Okay, imagine I close this and move this out, and this is my second entry. I would be in right here. Boom. This where I'll be at in off the second entry. I'm having my stop loss at the bottom of this demand. Now, you could put your stop loss right here. Oh, hold on. You could put your stop loss right here under the previous like candle that touched into the demand, but I like to have that extra room because we're already up $100 with these pips right here. I'm willing to take the loss on the second entry, but that's what my stop loss would be. So that's right there. All right, now we in, we comfortable, we waiting. So that's our close. That's our candlestick close. So now we can get our TP. That's out. All right, now we can get our TP. How do you get to TP? You go to the previous low before it crossed the zone, and you go to the body of the candlestick, not the wick, not that skinny line. You go to the body of it where the blue is, or the black, or whatever color your candlestick is, and then you go back down to the wick of the low, and that is how you get your TP. We go to the 2. Put our thing right here. Ooh. All right, put our thing right here. Put TP1. That's how we get our TP1. Now again, if you want to aim higher, we have TP2 right here. TP2. That's our TP2. And then, like I said, at most I'm going TP3. After TP3, I'm not looking at any more other entries. I mean, I'm not looking at any more. I'm out of there after TP3. I'm looking at reversals potentially, or I'm just done with the market. But that's the potential we can go. But right now, we're just waiting on it to hit TP1. And you could have got this where your main entry, another entry could be right here. Boom. Now we're in at the break. That could be a potential another entry right here. But we're already in twice. We're good. We're not being greedy. And right now we're up $224. So let's see what it does. Let's see when it hits TP. Didn't quite tap it yet. Now, well, I'm gonna wait till it hit TP and then, boom, TP hit. TP was hit right here. Now, let's say you wanna hold this. You don't want to get out at TP. You want to hold it for a day or two, a couple weeks or two, just to see if it'll go up or not. I would know, and I always call it that the market could potentially come back and touch this zone and kiss it goodbye. Now, it may not always come back and do that retracement, but for the most part, it will come back and retrace. It's kind of like something has to spring back to go even more forward. So the market might have to do that pullback like a slingshot. The further it pull back, the more it's going up. So I would like to consider that zone where it broke. I would like to say it's going to come back, kiss it, touch it, and kiss it goodbye, and then it's going to go. But it might not always come. It might not always come back. You might not always get that entry back. So, yep. So that's how right now we at 580. I held it to TP2. I held it to TP2 today because I was just that confident in it. Now, after TP1, you should be taking a little bit of profit. All right, if you in six lots, I'm at least taking 3. We're out of stop loss now. We could put our trades to break even to where we don't lose any money at all. So all right, we at TP1. We feeling good. We up $580, and this is in an hour 40. All right, bet. All right, see, it look like it want to come back a little bit. It did another 1, 2, 3 engulfing right here. another 1, 2, 3 engulfing. This is what a 1, 2, 3 engulfing looks like. Now, this is not at any. This is kind of at a zone, but we're in for buys. We're not going against the trend. Why? Because it's a saying the trend is your friend. Why would you go against the trend and you see it's up for buys? Why be looking at sales? Get in for the buys. Stay in with the buy, because it's kind of like you riding the wave of the buys. Now, when it's selling, we riding the wave of the sellers. You know, it is. We gotta do what we gotta do. But I got out at TP2 up here. All right, so we up. We at 758 right now. TP was hit. Boom. I'm out. TP was hit. I'm out. TP2 was hit. I'm out. $1,155.90. 191 pips. So we made $1,000 in. Let me get it right here. Got my ruler to show you the time and the pips in 2 hours. 2 hours. Yeah, in 2 hours, bro. It's still kind of just. I pray every day, and I'm more thankful that God has put us all, you know, because I'm pretty sure people who are watching are traders or, you know, aspiring traders. But it's crazy that God placed us in the path of this skill set being something that we were able to know, to learn, that could potentially retire our parents, retire us before the age of 30. Like, even in the losses, bro, even in the losses, it's like knowing you have this skill set to be able to make $1,000 in 2 hours. Some of us, it took us maybe 2 weeks to make $1,000. We can make that in an hour. I'm thankful, and I only give God and God only all the praise and all the glory. I magnify his name, because without him, we don't have the wisdom to know this. Some of us, it was in our path, we let it go. We let it go. But some of us still grinding on it. And if this not a full-time thing for you, that's cool. But it is for me. And, you know, I'm blessed to have this opportunity. So, yeah, bro. TP1, TP2 was smacked today. And let's see where the market currently is at. This is just a replay. Yeah, and right now we're currently sitting here April 23rd, 11:36. It's up here right now. I have it at this zone. I'm gonna delete this. I have it at this zone. I'm at this trend. I'm gonna go to the 15-minute. And honestly, it's doing another touch. It's doing another touch. Boom. That's one touch, 2, 3. So it either could go down or it could go up. But I'm done trading for today. And yeah, I'm gonna see it tomorrow. So imagine if we were still holding this. It's almost dang near the TP3. It's almost dang near the TP3. Now I could reverse. Maybe if I seen a 1, 2, 3 engulfing somewhere, you know, I maybe be looking at it for a sale. But yeah, we're done, and I'm grateful and I'm thankful. So thank y'all for taking the time to watch, to trade with me. Hopefully you took something away from this video. If you did take something away, put me a money bag in the comments. I consider this the money bag strategy, using the trends for either liquidity grabs or using the trend for the supply and or the demand. Like again, today we seen the demand was right there. Let's say we were looking at it for the demand would have lost today. The demand would have lost today, because I seen this demand. I keep saying demand, supply. I seen this supply. Let's say we rewind it back. I could do a little quick on how I got my do supply and demand real quick. But I'm gonna put 5-minute supply right there. I'm gonna delete that. Delete this. I'm gonna delete all these circles. Okay, so I had seen this. Now I had seen that it made a gap. This is a gap from this previous candle, and there was no lines in the middle of it. I'm gonna make it like yellow for right now. Right, okay, it was this space right here. It made a blue candlestick, and it did 1, 2, 3 engulfing at our zone to go down. That was a good entry to get in for the sale. I'm not gonna lie. At this zone, from that 1, 2, 3 engulfing, boom, we could have. I'm off topic now, but we could have been in right here, put stop loss over this supply, and took this all the way down to the zone. That's a quick trade right there, 42 pips. But anyway, so this gap, I see this gap. Now, we would have been wanting this to come in and touch this gap, to fill in this gap, because the market makes gaps, but it always come back to fill in the gaps, like how it was a gap right here. And it came back, touched in, filled this gap, came down, you know, but the market always has to fill in this gap. So we could have been like, say the 200 EMA was on top of this. Like, say, you know, this is where the 200 EMA was, looking something like that. You know, it would have been on top of it. We could have been looking in for sales if this would have came and tapped this zone. And so I was looking at it, right? But I'm like, nah, I'm in off that 1, 2, 3 engulfing at the zone. That looked good. This is how I use supply and demand as well for potential barriers, because I like it sometimes to surpass those, like, and lose for the supply, because that gives me even more confirmation that it's going up, right? I like for it, like, okay, I see this like I said, this could have been my TP1 right here. I would have been waiting. Boom, it tapped. Now, let's say it tapped this and then was wicking, doing like those skinny lines, looking like it wanted to go down. I might have been in for the supply, but I was looking at it today like, nah, I want this to close and break above so the supply could lose today, because I'm going to really know what's in for the buy. Look at what it did. Broke it. Once it does that, once it goes out of this box like that, the supply dead. Bye-bye. Sayonara. The supply dead. So, you know, so sometimes that's how I use supply and demand as well for a barrier. Then the demand right here, I'm going to go back and show you how I got to the demand. The demand was right here. The demand was right here. It made this little gap. I'm gonna show you. I'm gonna highlight where the gap is again. Put it yellow. It made that gap. I know I was waiting on it to come back, fill this little gap in, touch this demand to go back up. What did it do? Tapped it. Immediately went back up from it. Immediately. I'm in right here. I'm looking at it to go right here. Now, this is an aggressive entry. Aggressive entry would have been getting in as soon as it tapped. But like I said, I like to wait on that candlestick break. That candlestick break right here. How it came and it went past this candle right here. It came and this little blue went past this candle. I like to get in right there. It's safer. I know it's really going in for the buy. I know it's really going in for the buy. And what did it do, bro? You see that? Held this. You could have held this. Why? Because our stop loss was right here at the end of the box. 9:30 opening came. We already was up $100, $200. Look at the next candle. It's back up now. Oh my gosh. Money bag strategy is what I call it. So again, I thank y'all. I'm praying for everybody watching this video. I'm praying for everybody that even takes the time to comment, to show me love on my journey. I just started documenting my journey, and I'm fairly new to the documentation, but not of trading. I've been trading for three some years, and it has truly blessed me through the ups and the downs. Once you get over those losses and realize the bigger picture of the knowledge, the ability to do this, man, it's only up from here. So free Discord. Join my Discord. The link is in the description. Subscribe to my channel. Follow me on TikTok, Instagram, Patient Pips. That's what I like to call us, Patient Pips. We're patiently catching pips. Yeah, you could be catching pips, but are you patient with it? Don't matter what they are. I know what we are. So, I love everybody. Thank y'all. Be blessed.